trading is really a million little things. And one thing that kind of comes to mind is like a race car, okay? And when they're designing a race car, they're like, okay, we want to make this thing as light as possible. What if we took off a couple of the wheels? Would that make it lighter? Yeah, it'd make it lighter, but it would no longer run, okay? So they don't come up with these big, huge, drastic changes. They make one little change and tweak that, and they keep making another little change, and before you know it, they have a lighter and lighter car. What if we use an alloy for this one little brace here, or how big does this brace really need to be? But they're constantly noodling with that, and I love these Formula One documentaries. I've never watched an actual Formula One race, but the documentaries are fantastic. Senna, I would start by watching that one, and then watch Schumacher and anyone. And I just watched one recently, and geez, his name escapes me. It was kind of a quick one. It was about the 18-year-old driver. And spoiler alert on these things, they usually end badly. Sometimes not the way you think, but they usually end badly. But fascinating, fascinating, fascinating. Anyway, long story endless. On the one I watched recently, there's 2,000 people on a team. Okay, so you see the one little guy in the car, but there's 2,000 people behind him, the engineers and the I don't know what else. Just tons and tons of work on the pit crew. Tons and tons of stuff go into that Formula One racing. So and that's all that fascinates me. It really does. I don't know why I don't watch the races, but it's a very fascinating thing. Anyway, again, they make a million little things, a million little changes to on the race car, and a million little tweaks, and that's what makes a successful racer, or successful racing, I should say. Anyway, long story endless. One of the million little things I've been thinking a lot about lately is getting the reps in. Now, this is something I've talked about quite a bit, but I think it bears repeating and fleshing out a little bit more. Now, I have a friend in the gym. We'll call him Jose, and he's a nice guy, Cuban immigrant, successful, retired. Not that that means anything or has any meaning towards this presentation, but he's a good guy, and I've become really friendly with him. Fun fact, he has at least 6 fingers on his left hand. He has had 3 rotator cuff surgeries, and he jerks around the weights like a madman. He's a little bitty old fellow, and he lifts pretty heavy, but he's just throwing the weights around. It's very hard to watch. And I would be willing to bet there's a high chance that he's going to have a 4th rotator cuff surgery in the not too distant future. Since I've known him, I think he's had 1, and before that he had 2. Now, the trainer, he doesn't work with the trainer, but the trainer's in the gym, and if the trainer sees somebody with like horrible forms going to hurt themselves, he'll say something, and sometimes I resist myself, and sometimes I can't help myself. Like there's a girl that she'll grab like 50, 60 pounds. She's not huge. She's strong. And she'll just drop almost straight to the floor and bounce straight back up. And I can hear my knees cracking when she does that. But anyway, long story endless, everybody in the gym has tried to stop Jose from just throwing the weights around. And finally, about a week ago, I just said, I just got to get to the bottom of this. I couldn't stand it. I said, Jose, how come you jerk the weights around? His answer was, because that's how I've always done it. So long story endless, the point I'm trying to get to is you don't just want to get the reps in, you want to make sure you're good at getting good reps in, okay? So all reps or not good reps, you want to get in good reps, okay? And the deliberate practice sort of dovetails into this. So if you have time, read this article on my website. I've done plenty of presentations on it too. You can probably find them on YouTube, youtube.com/Dave Landry. And this is what I was talking about when it comes to deliberate practice about Malcolm Gladwell, and a lot of his research comes from Erickson. Now, Erickson and Gladwell have a little bit of a rift because Erickson seems to think that Gladwell says, oh, you just need 10,000 hours. If you read Blink, he talks about the fact that if you banged on a piano for 10,000 hours, you would not become Mozart, okay? So it does take deliberate practice. So I think these two are actually closer than they think as far as being in agreement, okay? So again, study deliberate practice. Now, just real quick, I just want to show you Landry light pullbacks. And the idea here is the great thing about this, I guess, is that this simple little pattern will help you to be able to identify and objectify setups, okay? So you always want to start with something simple and build from there, not just the opposite. And some writings I've done recently, I've met some people in my world travels that are doing things that are far more sophisticated and involve like bond arbitrage off of international bonds and things of that nature. And there's some people that, and I'm not saying this to brag, maybe a little, but there's some people like on TV who do options, okay, and other businesses within the industry have been started, and they started off by doing a lot of this trend following moron stuff. Now, what would the world be without hypothetical questions, said Mr. Wright. But one has to wonder if they tried to start with the complex, and they likely would not be, I don't think they could come out the gate and arbitrage bonds, right? Or trade complex option strategies. But if you start with something simple, like a Landry light pullback, and get the reps in, something easy to recognize, something that's somewhat objectifiable, okay? I'm not saying it should be mechanical, although in some cases, depending on your psychology, maybe you want something a little bit more mechanical. My friends who are mechanical traders, they think I'm more of a mechanical trader than I let on to be, because I'm always preaching 100% discretion. And I kind of think that they're more discretionary than they let on to be, because I think they have things that go in their system to where they might not take certain signals in certain conditions, or whatever the case may be. That's a whole nother ball of wax getting into all that. But the bottom line is keep it simple. And here's very simple rules. When you're looking at the setup, make sure you have persistency. In this case, you got persistency. Ideally, acceleration. You have a little acceleration here, and so on and so forth. This is an older slide, but I'm just seeing a lot of the things that I look for are in the chart. So you want gaps and laps in the direction of the trend, not opposite to the setup, or in the setup for that matter, and opposite to the setup. And you want, above all, you want it to trade cleanly. So let's break that down. Let's talk about a good rep. Now, your warm up, so to speak, would be start with one well-researched pattern. I've told the story 1,000 times, and I'll probably tell 1,000 more times. I was talking with a trader buddy of mine many years ago, probably in 2000 or way back then. And he was telling me about this trade he put on, and it worked, and he was all excited about it. And I said, well, that's a kind of neat little pattern. I can't really wrap my head around it. I was thinking to myself, it doesn't really seem that conceptually correct, but it worked. You know, I know it worked. That's two dangerous words. And I'm like, well, that's kind of neat. How long have you been doing that? He goes, oh, I read about it this morning. So obviously he didn't have enough time from this morning to when he placed a trade later that morning to well research, or the pattern was not well researched, obviously. So don't take my word on anything, right? Okay, trust, but verify. Make sure you go in and do your own due diligence. I think the little Landry light pullbacks are just a wonderful, simple little pattern. And if that's all you did, I think you do fantastic. In the back of my head, I was thinking recently, I like maybe take the one pattern challenge, or forget what to call, you know, or maybe some come up with a better name for it or something, where all you do is trade Landry light pullbacks, and then I would have people do that, and we would look at each other's trades. I'd approve the trades if that's what they wanted ahead of time, and we'd see how we did with just that one pattern. I think I haven't fleshed it out, obviously, so that's something that I might want to consider. Anyway, so again, start with one well-researched pattern, and then you want to do your thorough analysis. Like I said, every night, or like I said, ad nauseam, I should say, every night I go through about 2,000 stocks, sometimes a little more, sometimes a little less, depending upon the market situation and then what the database is providing through the scans. And in doing that, I get a feel for what's happening within the market internally. So I then look at the sectors, and if there's a stock I like, I'll look at stocks within the sector, such as, let's say, like a gold stock. Well, look at the other gold stocks. And if they're trending, and ideally there's a lot other ones set up, two things. One, maybe I like one better that's also set up, okay, that I might have overlooked for whatever reason. Or two, I get the confirmation that I need. So ideally, you want as much confirmation as possible. And getting back to the overhead supply thing, if you got a setup and it's got a big old amount of overhead supply, yeah, it might plow through it like this market has done so far this time and several other times in history, as my client pointed out. But it's not a good idea to bet that way, because there's going to be some sort of resistance when it hits that overhead supply. You're much better off having clear air above your setups. But anyway, you want to leave no stone unturned. Now, keep in mind, and this is kind of another conversation altogether, but there will be times where you do all the analysis. For me, a lot lately, and this is clients are like, Dave, we're ready for some setups. I thought we're paying you to give me setups. I thought you'd give me one a day. It's like, or two a day or whatever. It's like, well, I'm not going to give you a setup when I don't think it's worth trading. Now, I will show, as I said earlier, some of these, I'm long a couple of stocks, like I said, that are outside the service, and they were shown in the Landry list. And that's if you want to, and I'll give you some ancillary ideas, like, okay, if you want to be aggressive, take a look at these. And sometimes I'll show one, and I'll say, okay, I like it, but you've got some overhead supply, and maybe that's far enough away to where you don't have to worry about it. But if there's nothing to do, that it's never risk-free, but if there's nothing to do where I can't stack the odds in our favor, then I would suggest passing. And that's sometimes it's hard to do all that work and then walk away like, well, oh well. But if you do find one, again, you want persistency, acceleration, and all the other trend qualifiers that I'll have to talk about, like gaps and laps and direction of trend, Landry light, of course. And then above all, it has to trade cleanly. And as I've said 10,000 times, and probably say 10,000 times more, I get asked all the time about stocks that look like electrocardiogram. It's like beep, 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 beep. It's like, no, you want something that looks like the stock I just showed. Now, you need to take the yeah test. Okay, as I say quite often, if you're looking at a stock and you have that yeah feeling, now it might take a little while to get to that blink type of feeling like Gladwell talks about, where you instantly know, bam, that's it. So when I'm scanning, it's like I'm like the rat going for cocaine. I used to use my fingers, but now my wrists are worn out. I've got elbow problems. Had one surgery here, and that's a whole nother story altogether. But now I have a foot pedal, so now I'm slapping that foot pedal like a speed metal drummer. I can't think of the guy's name, but anyway, I'm just slapping that foot pedal, and then all of a sudden it's like, oh, that looks good. And it's like sometimes I'll get excited, like, okay, there's my setup, and I'll hit flag, and I won't even look at it anymore during this initial scan. I'm like, okay, at least I got one, and then I'll just keep going. And then all of a sudden the best setups jump out at me. Now, it takes a while doing that, okay? When I first started doing that, it took me hours to go through 2,000 charts. Now, if I'm uninterrupted, and mostly I do the interrupting myself, because I always tend to think of stuff at the end of the day that I wanted to do or want to look up or whatever, my ADD kicks in. But if I stay focused, I could do that in less than 30 minutes. My goal is within 30 minutes of market close to have all my scanning done. Now, that's all my initial scanning. From that scanning, I do have a momentum list, which right now is about 100 or 150 stocks. And then I had the Landry 100, which is 100, which kind of meshes in with those. So it's a subset. But anyway, so I do have a couple of 100 more stocks to look at a little bit more carefully, okay? And then I need to look at the indices, and then look at the sectors, and also all that takes at least another half an hour or so to get everything together, and then to put together the trading plan. But the point I'm trying to make is, once you have looked at enough charts, deliberate practice now, okay? Your deliberate practice is not banging on the keyboard or like a piano player banging on a keyboard. Deliberate practice is working to get better at what you do. So it does take practice, but it takes deliberate practice. So that's kind of a subject that kind of dovetails in with all this in the good reps. Now, the get ready phase is the planning phase, okay? Where are you going to enter? Where are you going to place your stop? The initial profit target, which is simply the entry minus the stop, okay? Add that to the entry for 50% profits should the market hit it, okay? The stock hit it. Your trailing stop process, which is, I kind of know it when I see it. If the stock moves up a few cents, I call that keep the change. I just leave the stop where it is, and it kind of gradually creeps wider over time doing that. The other one I do, the game that I play, and by the way, it's good to play a lot of these little games. The other game that I play is what I call gaining ground. So if I'm blessed with a 3-point jump in a stock, then I might only bring my stop up 2 points, okay? And that allows that stop to widen over time. So remember, I know I'm saying the same thing that I often say, but we're letting that stop. There's going to be somebody who's going to ask me. You let that stop gradually widen over time. You're changing hats from the trader to the longer term trend follower. If you are a longer term trend follower, as I preach quite often, you're going to be right about 28% of the time. So you're going to be wrong over 70% of the time. And your drawdown is going to be absolutely abysmal. And as I beat the dead horse, the turtles, not to be schadenfreude, but most of the turtles blew up after the program, okay? They weren't, or they certainly weren't as successful afterwards. The program, which Exeter Dennis, they had a bet that traders were made and not born, or born and not made, however, one took one side, one took the other. And they were looking at a vat of turtles somewhere in Singapore or Japan, wherever it was, where they were growing little turtles. So they were like, one said, oh, we can grow traders like turtles, and the other said, no way. And so they put this program in, and it was incredibly successful. And I didn't mean to go off this tangent, but The Way of the Turtle by Curtis Faith, that's the only turtle book I read, and I read his second book too, so I guess 2 turtle books. But definitely read that book. But anyway, long story endless, even within the program, while the program was still live, as I learned from Mr. Faith's book, somebody on the team figured out that they were risking way too much. And they immediately, I think, cut everybody's positions by at least half because they were risking too much. Now, they happen to be at the right place at the right time. And, maybe I'm a little jealous. Maybe I wish I'd have known about the program and I could have been a turtle. That'd have been great. But they were at the right place at the right time. And if you study all this trend following stuff and you fully understand it and you have a money management plan in place, then sooner or later, you're going to knock it out the park and you're going to print money. I can almost guarantee that, right? Because sooner or later, we're going to have another 1999 or something like that or whatever. You may not see my fat ass again if that happens again. That's one thing I learned 20-something years ago. But as long as you just chip away at it, get your reps in, eventually you're going to be there. For the print money phase, that's a great phase, but it could also go to your head. And that's, a lot of people do stupid things like tell a boss to F off or just leverage up and blow up during great times. And it's a really sad thing, but that's neither here or there. The bottom line is you want to get your reps in. Now, once you've done all your analysis, and I wish I had something eloquent to say about that, but the bottom line is most of your work is done ahead of time, okay? And one thing I would recommend would be the pre-mortem. We talk a lot about the post-mortem, which I will beat the dead horse on in just a few minutes, but the pre-mortem is where you sort of time travel. It's kind of back it up to the F yeah, okay, trade. And the so what test would be sort of your pre-mortem. So ask yourself, if this trade fails miserably, can I walk away and be okay and shout next? And honestly say, you know what, if this trade fails miserably, and I saw the same exact thing, persistency, acceleration, a clean setup, a stock that trades cleanly too, blah, 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 then I would take it again. So anyway, you've got your plan in place. And of course, just trade the plan. Plan your trade, trade your plan. That's all you got to do. My work is done. I would drop a mic, but I've broken so many mics doing that. I need to get a cheap mic or a fake mic or whatever. Anyway, trade the plan. So one thing you could do, you have to come up with some commitment devices to kind of protect you from you. And I would recommend possibly a hard stop entry on a position, or at the least set an alert. So what I will do, and I almost missed one a while back, and thank God my Facebook group pointed out, somebody in Facebook group pointed out that it triggered, and luckily it hadn't moved that far before I got in. So that's one advantage of having that Facebook group from a selfish standpoint. But if you are not going to watch the screen, and I would encourage you, if you're position trading, not to watch the screen. Yesterday, I think it was a TOI. I'm like, oh God, I'm all bummed out and depressed because I just got whacked horribly bad on it. I looked at the chart. I was like, well, I'm not stopped out yet, so let's just follow the plan. And I'm not too far away from a profit target on that now, which would be really nice. So if we have a little ding, I'll be pretty excited in a second. But anyway, use a stop entry or set an alert. So that way you can go about your life and you'll get an alert on your phone like, bing, okay, I'm in the trade now, okay? Or at the least, and I meant to say this earlier, it's like I might set 2 or 3 alarms. Let's say my entry's at 25 and the stock's at like 23. I might set an alarm at 24, 24 and a half, and then one at 25. So it's kind of like, wake up, dummy. Maybe when it's at 24 and a half, I should go place a hard stop entry if I'm not going to sit there and wait for the next alert. Now, here's the thing. I had, and it's too soon to start kissing each other just yet on this one, but I had no idea that it would rally as much as it did today, this one stock. And I said, but you know what, Dave, you're going to be doing your webinar later. Just put in a limit order just in case it spikes up and hits that initial profit target. Now, it hasn't done it yet, but it might be close enough for me to think about getting out. Maybe after the webinar, I'll get out of half, but hopefully we'll get a little zing. I know I just said hope. But you can put a limit order in there, and this is the only time I usually recommend using a limit order, except for like options where you don't want to get stuck in the spread or whatever. You want to try to maybe get between the spread a little bit and give them a little piece so you can make sure you get in. But if you're taking partial profit, sometimes you get that spike up. In crypto, I love taking profits on limit orders because you get these big spikes in there. I can't tell you how many times I've had crypto spike up and not have an order in place to take advantage of it, especially those shit coins, SHYT. So use a limit order. And I'm not a huge fan of limit orders, but every now and then, sometimes it's good to put one at your initial profit target, the IPT. And then here's the hard part. Do nothing unless there's something to do. Ken Lambert said doing nothing is harder than it looks. That's especially true for me after a couple hours of research and nothing to show for it, or looking at stocks all day long and then doing that intense analysis that I just talked about, because I'm looking at the Landry 100. I'm looking at IPOs. I'm looking at what's moving. I'm looking at my watch list and all these different things. So I'm looking at all these different stocks all day long, and then I do that hardcore analysis you talked about. And then to have nothing to do or show for it, that could be a little demoralizing. But that's a rep. That's not a trading rep, but that's a what's a good word for it? Analysis rep, which is important too. But anyway, doing nothing is harder than it looks. And you want to do nothing unless there is something to do. So that's, I repeated that one, but that's what you should do. Sometimes nothing. Trading is a lot of waiting. You're waiting for setups. You're waiting for entries on those setups, which may or may not happen. And the one that I almost missed, I waited like every day. I put in orders every day for like a week. And then on Monday I came in, or whatever day it was, and I forgot to put the order in. And then I saw in Facebook that they were talking about the stock that it triggered. Once stock triggers from the service, it's fair game to talk about. Anyway, so the rest, so to speak, after you did your rep would be the post-mortem. Now, if you have a losing trade, then you need to ask yourself a couple of questions. And actually, you'll probably know right away. How many times have you had a losing trade? And the second that you get that ding that you stopped out, you say, I knew I shouldn't have taken that trade. Okay, I'm guilty. Way more guilty, I'm willing to admit. but I'm not as bad as I used to be, but I'm still bad enough, right? So if you're doing that, then you had a bad rep, okay? That's not a good rep. So easier said than done, but start the whole damn process over and then make darn sure you're willing to live with yourself in the so what test. So if it loses, be willing to say so what or next. Now, if it wins, provided you did everything correctly during the warm-up phase, so to speak, then congratulate yourself. Annie Duke has talked about the fact that she's got a new book out. Excuse me, I haven't read it yet. I think it's about quitting, and trading is a lot of quit. What was that movie? He's got a lot of quit in him. That boy's got a lot of quit in him. I can't think of that movie. So I'm anxious to read it. I actually have it on audio, but it should be pretty good. But Thinking in Bets was a really good book. I tried her decisions workbook thing, and I was having a hard time getting into it. And I probably need to force myself through it. I don't work well with these workbook type of books. But anyway, trading is a lot of quitting, okay? And it's hard, especially if you're successful, because you become successful from quitting. But the bottom line, where I was going with the Annie Duke stuff was bad poker players attribute bad playing to bad luck, winning to skill. If you win because of luck, you really haven't won longer term. All you've done is taught yourself to trade badly or play bad poker. So again, if you immediately drop an F-bomb and say, I knew, then you had a bad rap. Now, it's okay to drop an F-bomb. I mean, I'm not going to drop it because it weighs about a pound and a half. But Mike Peterson was, a client of mine was kind enough to send me an F-bomb. So it's okay to drop an F-bomb, but then say, okay, next. And you know, this is where you go back to day one. You back that chart out. And you know what I should do is I should every time, this would be a great exercise. I'm glad I'm thinking about this. Every time from now on, every time I make a trade, I should capture the chart like that BCLI. I should capture the chart and then block out the name of the chart. Okay. And then, or maybe have some kind of way where I can get the name back if I need it. And then go back and see what happens with the stocks and say, okay, would I take this trade again tomorrow? And then if it didn't work, that'd be a good exercise to go back in time and do. So I would encourage you, every time you're thinking about taking a trade, take a snapshot of the chart and save it off, and then go back and look at it again. So what I like to do is back the chart up to where I got into the stock. And truth be told, I don't always do these things that I should do, but I don't always do that. Sometimes I'm pissed off when I get stopped out and just move on. But usually I will at least look back just briefly in the chart and see whether or not there's something there that I didn't see, because the whole game is psychological, as you probably know. And you're going to have a bias going in. You're going to have that, and I don't know if it's a cognitive bias, but you could have that excitement bias going into a trade. And there's a whole neurology just based on that. I was dreading an event not that long ago. I can't say what it is because it's going to throw several people under the bus. But the dreading of the event was far more worse than the event itself. And it's just kind of like you're excited to go do something, and then you finally get to do it, and you're like, well, that wasn't as great as I thought it would be. Well, that's human nature, okay? We kind of blow things up in our mind, good or bad. It's that anticipation neurology that's happening. And possibly there's probably some kind of cognitive bias, the intuition virus versus the intuition analogy or whatever. from Jimmy Rogers. Anyway, long story endless. So you need to separate luck from skill. Make sure you're getting in the good reps. Otherwise, you're going to need rotator cuff surgery. All right, boy, Chief Orman really wound up today.